What's going on, YouTube? Welcome to my channel, Invest in Yourself. My name is Cameron. I hope you like the background and kind of the different kind of animated, if you want to call it, that I'm going to throw into the video. But this video is going to be kind of overall, give you a perspective of one of my investments accounts, brokerage accounts I do have in Robinhood. I've been investing for, again, like I've told y'all in the intro video. If y'all didn't get a chance to watch the intro video, go back of one video. It's only got two. I'm brand new, so just bear with me a little bit, and we're gonna get through this. But again, the point of this video is to open up with transparency with one of my stock portfolio accounts I opened up in January, and I've been investing for 8 years. But I want to kind of go back and record and show you some of the stuff I did back in the lows in March in the stock market and what I'm doing now, and record some of this over YouTube for the next couple months, and record some of this stuff I got coming up in real estate. And hopefully this will help some of y'all individuals out there if y'all got any questions when it comes to stock market investing and real estate investing. Again, I'm not a financial investor. Just take what I say with a grain of salt. I'm just going to record what I'm doing and the financial things that I'm trying to follow. But I'm going to put it out there, and hopefully some of this stuff can better assist you in making some financial choices and investments in your life. But again, we're going to roll right into the overview of the stock market account. Let me know what you think, and hopefully you don't get too bored with my melatonin voice. If it do, let me know, and I'll switch it up. And if you don't like this background, let me know as well, because I'm just trying to do something different, not be the same old lottie-dottie like everybody on YouTube. So let your boy know. We're going to get into this right now. Here, YouTube, checking out the public account overall in Robinhood. As you can see, the last 6-7 months I've had a very, very good ROI, return of investment, overall in this stock brokerage account. And we're going to be going into the all of my different businesses that I own here in a second. But again, just wanted to give you an overall perspective of the account and how very, very blessed I have been over this last period, especially in the market that we're in and the volatility, and very, very done very, very well for ourselves. So first company I have invested here on the public account is Facebook. 13 shares sitting at about today, the stock price around 260. I've been adding off and on for the last, I would say, 3 months on this position. Right now, 13 shares. We're sitting around $210 with 6% portfolio diversification, and the return of the investment looking at 25%. But anytime that you can get this stock, in my opinion, under $300, take fully advantage of it. This is going to be one of the highest market cap values, I believe, in the next 5 years with this company. So again, Facebook, big time investment. Next stock in the public account here on Robinhood is Revolve Group with 135 shares, a little under $23 a share here now today. I've been investing in this company since they IPO'd back in 2019. I do own shares in this short-term account I've opened in January, and my long-term account I have in Vanguard. As you can see with the account, we've done very well with a cost average under $14 and a return on investment over this period of time of south of $1,200 with a portfolio diversification under 6%. Anytime I think this company's needed for a little bit of a pullback, but I think anytime you get the company under $20, it's a steal and a good value buy. I see this as a great future investment 3 to 5 years down the road, especially when it comes to women's clothing, and they don't do a lot of marketing when it comes to different aspects of commercials. They're strictly more of different online aspects, and they go through with a lot of different Facebook and Instagram influencers and getting their marketing through giving those people free apparel and getting their name out. So a pretty smart marketing aspect from this company, and I believe this is going to be the future when it comes to e-commerce, especially when it comes to apparel in the future. But it's a great company. Anytime you can get under $20, I think it's a steal. Next company we have here in the public account is Advanced Micro Devices with 36 shares under $82 a share as of today. I've been investing in this company for the last 2 years in the multiple different brokerage accounts that I have. This company has been on a rip the last couple of weeks due to delayed release of one of the microchips from Intel, and the company has seen a increase of their share price in those couple of weeks. Average cost we're looking at under $48 a share, and keeping that right around 5 to 6% of portfolio diversification with a return of money of $1,200. But it's a great stock to get into as of today. Anything you can get under is $80 a buy, it's a good buy, and if you can get under 70, it's a great investment. But again, AMD, great investment, long-term growth stock. Downfall, no dividend, but compared to Intel, but I think it's a great growth stock. You're going to get a good return on your investment 3 to 5 years out. The next company I have is the behemoth Microsoft in the public account. Looking at a little under 20 shares, a little over 19 shares in the account, with total return over the last 6.5 months of right under $1,000. Still trying to build out this overall. I like to get around to about 50 shares into this account. Again, this is the second biggest company when it comes to market cap. I think they're sitting under $1.6 trillion, right behind Apple. Apple, I think, is almost fixing to eclipse the 2 trillion mark, but Microsoft is going to still be a big player in the cloud computing game, and anytime you can get this stock at low 200s or under 200s, it's a phenomenal buy in my book. So again, Microsoft at these prices wouldn't be not a bad idea to maybe start dollar cost averaging in, especially if the acquisition comes to TikTok. Maybe a pretty smart move. Next company we have in the public account is Qualcomm, sitting at around 17 shares today, less than about $114 a share. Really started going heavy in this position in this company back in April with the dispute between Qualcomm and Apple with the 5G situation when it comes out with the new iPhone, and this is my position I'm getting in my account to get a little bit diversificated in 5G, because I think I was short overall in my account, and trying to get into the 5G spectrum, and get my foot a little bit wet into it. But overall, when Apple has entered into like a 6-year patent licensing agreement with Qualcomm, I hopped on this really quick, and as you can see, average cost is really good in this account overall. And again, I want to build this portfolio diversification at least to 5%, but again, I'm waiting for it's running a little bit rich, and I'm waiting for it at least to get low 100s, or possibly it would be a great buy under 100. And this is another great value play when it comes to, and growth when it comes to getting a nice dividend. So again, Qualcomm, great 5G play. Next company we have in the public account is Nvidia, sitting around 11 shares with the $464 share price as of today. Right now, I've kind of dollar cost average since the March lows into Nvidia. As you can see, it's I think it's the second or third biggest portfolio diversification percentage in the account. Big reason why I got into the Nvidia, especially with trying to get some diversified into artificial intelligence, and the way Nvidia generates its revenue primarily from sales of graphic processor unit GPUs, and it's accounted for 87% of their total revenue process. And I believe in the future, when it comes to GPUs, AI, and different aspects of Nvidia's revenue, different revenue streams of revenue that they're going to bring into their company. This is going to be a high growth potential in the future. And again, it offers a slight dividend. And again, I think I end up buying 2 shares today around $4.63. I believe probably before earnings. I think earnings is on the 19th of this month. I think we're going to see this pop up above $500 a share. So anything less than $500 right now, I think it's a great time to open up at least a small position, dollar cost average into Nvidia, because over the long term, unless they do a stock split, I see this in 3 to 5 years being $1,000+ a share with this company, especially with when it comes to different deep learning and AI configurations. So Nvidia is a great kind of new stock to get into when it comes to artificial intelligence. here in the public account at 31 shares of Raytheon Technologies, sitting today around $63 a share. Kind of know quite a bit of the Raytheon side of the house before the merger. Do work in the defense sector myself. That's into the air defense side, and really work one-on-one with Raytheon reps and some of their different air defense weapon systems. And I'm a big bull when it comes to Raytheon and the defense sector. Just a kind of outlook on the volatility of this stock and how you can track it when it comes to how it moves, kind of coincide with another company, Boeing. Wherever kind of Boeing goes, Raytheon kind of coincides with Boeing since it's on the defense side. I don't know if that correlates or not. Don't quote me on that. But again, pretty big, I would say, subject matter expert when it comes to Raytheon and air defense aspect on the defense side since I've been working in that field for 11 years. You can see some of the numbers I have. I've been investing in this since after the merger. I think it was around May or June, but don't quote me on that as well. But I firmly believe this in the long run. It's a great value stock, dividend stock, and I firmly believe in it. If you can get this at around low 60s, it's a good buy, and anytime it's below 60, it's a great buy. So great value play, some growth potential, and a great dividend yield around 3.5%. Disney here in the portfolio public account, sitting around. I want to build this up to 20 shares, but haven't got around to it yet. But in the account, sitting around 19 shares as of today. Started opening up in this account and in the long-term account back in March when they took a real heavy hit from the pandemic, and it was kind of hard, especially when it comes to a value play. Disney's been around for years and years and years, and I think as soon as they start getting their numbers back when it comes to their theme park and people start getting out again due to the pandemic and start, we hopefully get some, in the next 18 months start getting some vaccines and people get back out traveling again, Disney will go up. And then you have Disney Plus with their channel, and they were looking pretty decent, a lot better than I thought with their last quarterly earnings, and it reflected with the price of the stock going up. As you can see, I already said again, I want to kind of keep on building this away. I think even right now at $130+ is still a great buy for Disney. I know they don't offer a dividend right now since they cut the dividend back in April time frame, but again, that dividend, I firmly believe 100% it will come back. And again, this is kind of like one of those, for my portfolio, it's kind of that barbell aspect. I'm trying to build some, I know I'm kind of tech heavy, but I need to start building some different companies with value plays, defense plays, and different aspect in the account. But again, Disney, a great overall play, value play, and a little dividend when it does come back. Here's another company trying to weigh out that barbell aspect here in the public account. We have Boeing with 13 shares sitting south of about $178 a share today. I started dollar cost averaging in March, but I think I first bought Boeing around $95 a share in this account in March, and it was crazy. I should have loaded the boat, but I didn't. And I just kind of dollar cost, I think all the way till about the beginning part of June or end part of May. And timing was really crucial. And I started adding when it started going up. It was kind of a FOMO, my last 2 or 3 shares I bought into it. But again, I still want to keep on building this out. I think we're still going to see a little bit of pain ahead until the 737 MAX gets off the ground and it gets approved by the FAA and the government to fly again. But I firmly believe as soon as that the 737 MAX gets approved, that this stock's gonna jump above $200 a share plus. So anytime, I think right now, anytime you can get it below $200 is a great value play. Even I know they don't have a dividend right now; they cut the dividend, and they're hurting. And I mean, everybody's hurting because their equivalent company, that's their competitor, is Airbus. They're hurting is just as bad. So again, I think this is a great buy if you intend to hold it for 3 to 5 years. I think you're going to see a lot of growth out of this stock, and hopefully get some the comparable dividend they had in the future. I mean, pre-S the pandemic back in February, January. Hopefully you get that same quality dividend from Boeing. But again, it's another barbell company I have weighing out my tech heavy portfolio. Next company we have in the public account is Alibaba, around 9 shares, sitting at around 254 a share of today. I really got involved in this stock as a hedge for especially the emerging markets. That's why I haven't really built it out is in a heavy position as of today, because of a lot of the different factors going on with China and our government right now, and facing different tariffs and different aspects we got going on between the political side of the house with our government and China. But if in the next 12 to 18 months, I believe this is one of the most transparent companies, Chinese companies, when it comes to being upfront and honest with their books to the SEC. I know they don't have to open up their books to the SEC, but they actually are fully transparent to the SEC compared to other Chinese companies. So that's why I started a small position in this company and to get into emerging markets. And I fully believe they have that whole concept, like when it comes to Amazon with different tech, e-commerce, and across the different boards, the spectrums. I think this is going to be a great growth stock, and maybe one day offer a dividend as a value play as well. But again, something I want to build over time. Anytime you can get this stock under 250 is a good buy, and if you can get it in the 220s, low 200s, it's a great buy. And I firmly believe this company will be safe in the future, even if we still having issues with China down in the future. So again, Alibaba, great hedge to emerging markets. Next stock in the portfolio, this is my number one stock, my heaviest diversified in the stock portfolio is Tesla, sitting around 13 shares in these stock account. As you can see, some of the numbers I've got, this is obviously I'm kind of really weight heavy in this account on Tesla. I am a Tesla bull. I own Tesla products. I believe full heart in Tesla and their overall concept and the way of the future when it comes to sustainable energy. I own a total of about 67 shares in over 3 different accounts in Tesla. I've been investing in them for the last 2.5 years. I started investing in this account in January and kind of dollar cost averaging overall. I think the last time I bought any shares in this account at Tesla was back in middle of May, and I haven't added nothing since. Again, I think Tesla has got very rich, if you want to call it, when it comes to the stock price. But with this current stock split coming up, I think it's a great opportunity for people that can't afford, $1,600-$1,700 a share to get into the emerging markets when it comes to a sustainable energy market, especially with Tesla. I'm a firm believer when it comes to all these different EV stocks out there today. We have I really just don't see the other ones ever compare. Maybe down, I wouldn't say never, but maybe down the road comparing to Tesla. But this is for the next at least 10 years, I think Tesla's got an edge up on people. So again, if you got any questions about Tesla, again, I got been driving their vehicles off and on probably the last 3.5 years, and been investing in the last 2.5 years. And again, I think if you can buy this stock anytime under $1,200 and anytime under probably $400 after the split, it's a great buy. And overall, I think you need if you're buying today before the split, it's a good thing to hold 3 to 5 years. It's just I believe their output on their vehicles and solar and different aspects they got coming up with their insurance and different avenues they're going to come up with in the future. I think it's a great buy and a great growth stock. And what can you say? Just numbers don't lie. And overall, I think this is going to be one of those $2 trillion companies 10 years down the road. So Tesla. That wraps up for this video, YouTube. Thank you for coming to my channel and investing in yourself. Please let me know down there in the comments if you have any questions about the video. Again, I'm going to keep on opening up full transparency about some of my investments, not just this account, but other accounts I do have, and investments I got coming up in real estate, and kind of going over some Q&A on real estate closing, real estate market, housing prices, loan prices too as well. Not just when it comes to the stock market, but it's going to be a total of different assets on gold and silver and crypto as well on this channel. I hope y'all like the background. I may keep this since it's a new channel and it's different. Let me know what y'all think. Y'all like this background on me. I think that this is pretty awesome though. It's different. That damn chicken. Sorry about that. Peace out.